Hey everybody, today I'm going to get into Chapter 7 in our handy dandy QuickBooks tutorial textbook. So we're finally getting more focused in our trip through learning QuickBooks. Chapter 6, we focused on purchasing activities. We stayed pretty much centered in the vendor area of QuickBooks here. And now in Chapter 7, we get to move to the sales side and the customer center here within QuickBooks. So first off, on page 7.3, we're going to make a credit sale. So remember, when we're making a credit sale, that means accounts receivable is involved. Somebody owes us money because we're not getting paid when we make this sale. So in order to make a sale on credit within QuickBooks, we're going to go into an area that we've touched on a little bit previously. We're going to click on Create Invoices. So once I've gone into Create Invoices, we're going to make a sale to the Columbus Inn on the bottom of 7.3 there in the green box. So I'll just type in Columbus Inn. You can see their information fills in there. Change the date, change the invoice number, and you can see their credit terms and the due date automatically fill in. I change the template in the upper right corner. If it comes at Rock Castle invoice, change the drop down box to Intuit product invoice. So we'll match the picture that we have on 7.4. So it was ordered on purchase order. So I'll type in the purchase order number. And then down on the bottom, I will fill in the items that we are selling them. And you can see, just like we've talked about before, the default rate automatically fills in, multiplies times the quantity to get the total. And then it automatically factors in the Ohio sales tax of 5% here. So the total amount due is $1558.20. And that should match the picture on 7.4. So when I'm doing an invoice, like I said, we're debiting accounts receivable. We're showing that the customer owes us money. Our credit goes to our revenue account. Our credit goes to sales. We also have a credit to sales tax payable. The $74.20 we would recognize as a liability until we send that money to the state taxing authority. So that's the first journal entry that's involved. The other journal entry that's involved is we've got to take this product out of inventory. So we've got a debit to cost of goods sold and a credit to inventory for the cost of this product. So in a previous assignment, I asked for the journal entry associated with the invoice, and I gave you guys the hint that there were 2 journal entries available, and very few people listed me 2 journal entries. So when I tell you guys 2 journal entries, that means 2 separate entries, not a debit and a credit, but basically 2 lists of debits and credits. So we'll hit Save and New, and we'll create another invoice. We're going to sell something to the Oaklawn Hotel on page 5. But now what happens when we want to change the prices? So I'll type in the quantity and the item, and I'll tab over to the price, and it looks like instead of $27.50, we're going to charge $22.50. And we can just tab over or click on the item and just change the amount that we want to charge for it. Oopsies. So QuickBooks will give us a hand here, having us plug in the information as far as what we've set for those default numbers. But once again, it's just there to make our lives easier. We're not tied to it. We're not stuck to it. As we've talked about before, QuickBooks is very forgiving for us. QuickBooks makes it very easy to make changes. So we just change the prices and we get a total invoice of just under $827. Should match the picture on the bottom of page 5. So let's hit Save and New. On pages 6 and 7, and 6 through, looks like 6 through 9, 9 and 10, we're going to make a sale to a new customer. So previously we had went back in through the Customer Center and we had created a new customer. Within the invoice window, we can come up here and create Add New, and we can fill in all the information for our new customer here so it matches the pictures on 7 and 8. Remember, what we type in the very top here is what's going to show up in our Customer Center as far as the names of all our customers that it defaults to, which is why I put the emphasis on last name, comma first name for listing customer names previously. So we just fill in all the details for this customer. And click on the account number tab, or the payment settings tab, I should say, and we can figure in their credit terms, their credit limit, and under the sales tax settings, we can fill in, see it automatically defaults to tax and Ohio sales tax. So once we're done entering all their information, we hit OK. You can see all the default stuff plugs in the various boxes. And then we can just create the invoice as we've done previously. And you can see we get a total invoice of $186.90. So once we're done with the invoice, matches the picture on page 9, we can hit Save and Close, and we can go back to our home page. So if you remember the items in our home page, they're set up like a flowchart. The flowchart, similar to what we saw in the manual practice set. So you see from Create Invoices here, we go straight over to the right. The next part is then to receive payments. So at some point in time, we're going to get paid from the stuff that we sold on credit. So we're going to receive a payment then on page 12 from Greenleaf Suites. So I'll type in Greenleaf Suites. And then down here on the bottom, you can see the only invoice that we have. So we want to make sure we apply payment to that invoice. So I'm just going to check next to it. I'll type in the check number. But you can see they owe us $12,537. But they only paid us $12,286.26. Why is that? Well, they took advantage of the discounts. So remember those credit terms and the discounts for paying early. They've got credit terms of 210 net 30. So they're taking advantage of a discount, just like we talked about a discount within making our payments earlier in the last chapter. So to apply the discount, we're going to come up here on the top button bar and click Discounts and Credits. So under Discounts and Credits, you see here was the nice thing. It automatically calculated it for us. And we're going to use the discount account sales discounts. Now that happened to be what automatically popped in here. That's just because it was the last discount account that we used. It's not necessarily going to be the correct one. What if some other discount account, whatever there's some expense account that we'll get into later, pops up here? You're going to have to come to the drop-down box and make the change. So make sure when it's a discount on a payment, you use sales discounts. Hit done. You see the discount automatically factors in here, and now the amount of my payment changed to factor in the amount of the accounts receivable less the discount. And my payment amount matches up here in the box at the top. And this should match our picture on the top of page 13 now. So once I've got my payment recorded, I've got the date set, I've got the amounts, I'm paying off the invoice was paid off. So what's going on here is a debit to cash. We're receiving payment. We've also got a debit to sales discounts for that $250.74. And then the difference, our credit, the rest of our journal entry, what account's getting smaller right now? Well, if they're paying us on money that they owe us, then our accounts receivable is getting smaller. So a credit to accounts receivable for the entire amount of the invoice due, that $12,537. So then our credits should match the total of our two debits. Save and close, and we go back to our home page. So after we've taken in the payment, well, the next step is we're going to take that to the bank and deposit it, or snap a picture with our phone or whatever, depending upon how fancy our bank is these days. So from receive payments, the next spot over on our flowchart here is record deposits. So once we've received that payment, we've got to make sure we deposit it in our checking account. When I hit record deposits, a list of all the checks or payments that I've received is going to pop up here. And I'm just going to check against the ones that I've taken to the bank. Now in this case, relatively easy because that's the only one. I'll hit OK. I'll come up here and set the date. Once again to the second. If we happen to do any cashback stuff, we could recognize that down here on the bottom and how we would account for, an owner drawing or whatever we're doing with that cashback. With not having anything like that, we'll just hit save and close. And now that's deposited in our bank account. The checking account should have a balance of $12,000 higher than it did a couple minutes ago. So that's when everything is great, hunky-dory. We received the entire amount that we're owed within the discount period. What if we only get part of our money? And we'll handle that on page 15. So under page 15, we're going to get money from McCarthy's Bed and Breakfast. So once again, we'll click on Receive Payments. We'll type on McCarthy's Bed and Breakfast. And in the payment amount, we're just going to type $3,000. We're only getting $3,000, and you see it automatically applied it to the invoice below. We got to be careful about that because it's automatically going to take it to whatever the first one in line. So if you have multiple invoices down here, we just got to make sure that $3,000 is being checked off against the correct one that we're paying. So you can see they're not paying the rest of the bill. We're just going to leave it as a balance on their account for now, and we'll deal with it later. So once I'm done, I'll hit save and close. Oh, my check number didn't go in there. There we go, that's better. So now I'll hit save and close. Once again, I'll come over here to record deposits. Page 16, it goes through the deposits. So once again, we'll check off against the only check that we have. Hit OK. Once again, change the date of our sample company here. Hit save and close, and I now have another 3,000 bucks in my bank account. So that's what we got to do if we're doing things on credit. We're making the sale and getting paid later. But what if we're making the sale and getting paid at the same time? Well, we've got another window that's essentially going to combine the invoice and the receive payments window into one step. So rather than doing it as two steps, we get to do it as one. So I'll come in here to create sales receipts. We're going to make a sale to cash customer. Change all the details to what they want. So you can see there I check off check just like in the receive payment window. I type in the check number just like the receive payment window. And then down on the bottom I enter in the items that I'm going to sell just like the create invoices window. So we'd have a total sale of about, just under 822 bucks. So in this case, from the sales receipt window, I've got a debit to cash and a credit to sales and a credit to sales tax payable. And then once again, I've got two entries. So I've got a debit to cost of goods sold and a credit to inventory as well for these products that I'm now moving out of my inventory. So remember, we can't expense things as cost of goods sold, or we can't expense inventory as cost of goods sold until we make the sale. So once I'm done, I'll hit save and close. And once again, I would come over here to my record deposits window. And then there's the check that I just received in that sales receipt. So just like before, I'll check it off. And switch the date. So we're going to click on refunds and credits. And now this is how we're going to handle something that is being returned to us from inventory. So now the Columbus Inn on the bottom of page 21 is going to send us some stuff back. So then we go to 22 and find out that it's some draperies and some shower caps. So we'll come here and just fill in the items. So essentially we're putting these guys back in our inventory and we're putting these against the invoice that we've already created. We're crediting accounts receivable by the amount of return. So I'll hit save and close. It'll say what you want to do. Well, we want to apply this to an invoice so it doesn't show up that they owe us that full amount anymore. So we'll hit OK. We'll go against that invoice 5128 and hit done. And now they won't owe us quite as much money. But what if we are not getting a specific item back? We're going to be granting them a discount essentially on a return. So they call it a sales allowance here on page 24. So for the Columbus Inn, we're going to grant a sales allowance. We probably sold something that wasn't quite up to standards, and we're just going to go, hey guys, we're sorry, but we're just going to knock a little off the price. So we're going to type in the draperies, and then just under the rate here, we're going to give them a discount of $200. So in that case, we're leaving the quantity blank, and we're just and then you see it cost by granting credit for the sales tax for the amount of that. So an additional $10. So I'll hit save and close. Once again, we want to apply it to the invoice 5128. So we've made a sale, we've gotten paid, we've done a sale and getting paid at the same time. But if we're making a sale and we're not getting paid, so we're doing things on credit, what's the biggest risk that we have? Well, it's that we're not going to get paid. So we're taking the risk that maybe we're not going to get paid by a customer. So now let's say that on pages 27 through 29 that we don't get paid by McCarthy's Bed and Breakfast. They still owed us another $138.75. So we're going to do what's called writing off their account. So you remember back in the practice set, we had to write off Stevenson's college account when they went bankrupt. So same idea, we want to wipe away this accounts receivable. So we're going to go under receive payments. We're going to type in the customer, and we're going to see here that under amount due that they owe us $138.75. So what we're going to do is click on discounts and credits on the very top of the page. We're going to type in the amount that we're taking off, and we're going to use the expense account bad debt expense. We hit done, and you see we got an amount due, we got a discount, and it's going to bring their balance to zero. So when we're doing a write-off, don't put anything in the payment amount box. If you put something up here, that's assuming that you got paid for it, and it's going to show up in that enter deposit window later. But we don't want that because no money changed hands here. We didn't get paid. We just know we're not going to, so we're just going to get this amount off of our accounts receivable so we don't have to look at it every month. Hit save and close. If I click customers, I'm going to go to my customer center, and I see McCarthy's Bed and Breakfast here. You can see they've got a balance of 0. And actually, I should have, under the check part, put a bad debt right off. So to have a little explanation of what happened. Yeah, I like that better. So we can see that our write-off worked, and they have no balance. So now we're going to talk about page 31 what's called a miscellaneous cash receipt. So we've got a bunch of fancy buttons and things that can make it easier for us. But what if we've got a transaction that doesn't necessarily fit in there? It's not part of making a sale. It's not part of what we're in business to do, but we need to show that we received this money. So an example of that is what if we received money from a loan? So on the bottom of page 31 and then 32, we're going to show how to receive this miscellaneous cash receipt. And what we're going to do is go under Record Deposits here, under Banking. We're going to type in the date, and then we're just going to fill in the information here. So we're going to fill in who we received the money from. And I'm just going to use the Quick Add feature to plug them in. Now under From Account, we put in what we're recognizing this is. So in this case, we're taking on a loan, we're taking on debt. We're going to use the account long-term debt. In the memo, we'll type in that it's a note payable. Then we'll put in the details. So essentially what we're doing here is debiting cash, crediting notes payable from the amount of money that we're receiving. Hit Save and Close. And we received that miscellaneous cash receipt. So we're almost there. Hang with me for just a couple more seconds. So at the end of the chapter, the last thing we're going to talk about is how to send a statement. So if we've got customers that owe us money, by the end of the month, we're going to send them a statement saying, hey, here's what you owe me. Please pay me relatively soon. I'd surely appreciate it. So it's important to stay on top of sending statements to your customers so you ensure that you're getting paid. So we'll come under Statements here. And this is going to open up a window similar to the bottom of 33 here. So we'd put in what date is this as, the end of the month, what time period is this going to be factoring in. So in this case, they have it factoring in January and February. I would recommend sending out statements every month. So doing it at the end of January, the end of February, end of March, etc., etc. So once again, you stay on top of those customers and making sure you're getting paid. And then you see it defaults to all customers. We could hit print and we print out a statement for everybody that owes us money. We could do it for a set of customers, we could do it for one particular customer, or we could come over here on the right and make sure it doesn't create statements for like somebody with a zero balance or somebody that owes us less than $5 or anything like that. So just we make sure that QuickBooks isn't printing out extra stuff that we don't need. So on the bottom here, we're just going to do one particular customer, and the book wants us to do McCarthy's Bed and Breakfast. So if I just type in McCarthy and then I just hit preview, it'll show me what my statement's going to look like. So you see the company name in the upper left corner, the date in the right, who's it's going to, and then all the transactions that they've entered into for that time period. Did I set up the wrong date on my bad debt write-off a little bit ago? Might have made a mistake there so that it's not showing up on the bottom of my statement, but that's irrelevant. So when you get to your homework, you see you got the options to print or email. I'm going to want you to use the email one and send the statement to me. I'll pay attention to my email address in the question feed. If you have any issues with that, take a screenshot of it or snip it or something and just send it to me in an email. That's fine as well. So there's everything in Chapter 7. If you have any questions, please don't hesitate to let me know.